at the beginning of this course, when we were deciding when we were going to start our QuickBooks, like our start date, I mentioned a scenario where maybe you started your business earlier, but you just recently got that separate business checking account. So I created an example whereby we're pretending that our business started back in 2017. And for the month of January, all of our business expenses were running through our personal account and our business revenue. But then starting February 1st, we were good boys and girls and we got separate business financial accounts. We got separate business checking, separate business credit card, separate business PayPal, and we really completed those separation steps that we needed to. So we chose 2/1 as our start date for QuickBooks in this little example here. But really, we'd like to have the entire year's worth of data within QuickBooks, but we can't link as of 1/1 because these were in our personal accounts. So I'm going to show you a way to handle that. There's 2 videos on this topic. This is, in my opinion, the easier way, but I'm going to create another video to show you a different way that you could handle it as well. So in this way, we're basically just going to summarize our activity and then post journal entries to account for that. So come over here to QuickBooks, do a plus sign, and do journal entry. You don't have to be intimidated by journal entries. Just follow my debits and credits and you're going to be fine. Okay, I'm going to post this entry as of January 31st. So I always use the end of the month or the beginning of the month, often for my dates that don't necessarily have a specific date, because in that way it's kind of like my method for saying this is the monthly activity. It's not a specific date, it's the whole month. So what we're going to do, instead of doing each item, I am going to group some of these because the expenses are the same. So if I take this graphic design amount, oops, there we go. Okay, so that sums to $25.85. So what we're going to do is we're going to come over here. We're going to find our expense. So graphic design, sub-account of blog expense, blog graphic design. And our expenses are going to go in the debit column. So we had $25.85 of graphic design expense. Next, you'll notice we had office supplies. This summing will hopefully be easier. There we go, $40.66 of office supplies. So keep in mind, this is things that we business expenses, then we'll get to business revenue that we paid for out of our personal accounts. But we want to capture this activity in QuickBooks. Okay, so that's office. Last one was taxes. Okay, so QuickBooks is summing the totals for us. $89.02 in expenses. And down here, $89.02 in expenses. Debits and credits have to equal. So the opposite side of all of these debits and the expenses you will always put in the debit column for this type of entry. The opposite side for this is going to be an equity account, owner investment, owner contribution or investment. That's because it's basically like we invested $89.02 into our business because we paid for these expenses with personal money. So that's why it's an owner contribution. Now I could save and close this journal entry now, but I actually, just to make it simple, well, simpler for me so I don't have all these extra journal entries that are actually nonsense, I'm just going to show you the other side of it. So you can keep this as one entry, or you could break out the expense and revenue into 2 entries. So we have this revenue right here, and it's affiliate income. So let's find that. Revenues are going to be on the opposite side. They're going to be in the credit column. So we have to balance out the other side of that revenue, and that's also going to go to equity, and that's going to be owner's pay and personal expense. And the reason for that is because this blog income, instead of going into our business accounts, went into our personal account. So it's like we paid ourselves $15 out of our business. So that's why it goes to owner's pay and personal expense. So like I said, you can do this combined entry, just like I showed you, or you could split it into an expense entry and a revenue entry. It doesn't matter. Make sure you get the date right. So because we started our books as of like our business records with our separate checking and everything, credit card in QuickBooks as of 2/1, it just makes sense to put this as this was our January data. So we want to make sure we put that correctly so that when we run our reports, we can see our income and our expenses in the month of January. So like I said, just we could have separated out all these individually, but we're just trying to capture the data of what type of expenses they were, what type of revenue. So we summed appropriate things together. We combined it all into the entry. Expenses are debits and owner contributions. Revenues are credits and owners paying personal expense when these transactions occur within a personal account. Okay? Hopefully this isn't too confusing, but I wanted you to have the tools at your disposal to do an entry like this and capture your full year of data. So come tax time, you're not having to add these numbers in with your numbers out of QuickBooks. Okay, I'm not going to save this journal entry because I just made it up, and it's not really what I need to include in our sample company, but you would go ahead and save that entry and you would be in good shape. In another video, I will show you a different way you could handle these business transactions that occurred in a personal account. It's a little bit more complicated, but I'll cover it anyway.